Hello, welcome back to VopSays. This is part 2. In this video we'll be talking about loans and savings. First of all, here are some definitions that we'll be using in the video. APR stands for annual percentage rate. It is a way of comparing the amount of interest paid on loans. It is the amount of interest and fees paid in 1 year as a percentage of the whole amount borrowed. So here's the formula for it. So if you have APR or anything like loans and stuff, use that formula. Another way of getting loans or borrowing money is through credit cards. This is how they work. You use the card to pay for things, then at the end of the month you are sent a bill, including interest for the month. You can either pay off the complete amount owed without interest, or pay off a lesser amount, though this must be more than the minimum amount depending on the amount owed. The interest is then charged. The same applies next month as well. Credit cards, however, tend to have very high interest rates, for example 20% APR, so they are an expensive way to borrow money. Next way of borrowing money are short-term or payday loans. Short-term loans are loans but with very high interest rates because you're paying them back in a short amount of time. Here's an example. You borrow £1,000 for 6 months. You'd have to pay £316 each month. Altogether, you would repay £1,896 altogether. Interest paid would be £896 and the APR would be 259%. Now for the big one. Student loans. This is for 2022/2023, so if the information is outdated, I can only apologise. Students going to university usually borrow money from the student loans company. They usually take out 2 loans, a tuition loan which is paid directly to the university to cover teaching and course costs, and a maintenance loan which pays for food, accommodation, transport and stuff. These loans are charged interest, added annually in April. The amount a student pays back depends on how much they earn. They stop paying their loan if they pay off all the loans on interest, or 30 years after graduation it is written off, or if they die. Sad times. Borrowing per annum, tuition loan is up to £9,250. Now for the maintenance loans, if you live at home, your maintenance loan can be up to £7,987 a year, which sounds like a lot, but it probably isn't. Living away from home, up to £9,488, and finally if you live away from home and you live in London, it's up to £12,382. Here's an example. Alright, now for interest, I'm just going to leave this up on the screen. Here you can pause the video, you can read it. Now for the repayments. New students. I'm probably going to be a new student soon. Don't worry about repayments, don't worry about debt. I'll reassure you now, you only pay back 9% of everything each year, but only if you earn over a certain amount. You only start paying off your loan when you earn above £27,795 a year. Here's a formula here. New balance equals old balance plus interest minus repayments. Remember, after 30 years, it's written off. The balance of the loan is written off. So here's an example here. A former student earning £28,000 a year repays this. So £27,000 minus the £27,275 times that by 0.09 equals £65.25 a year. Each year, that's all you pay. Now most people will never repay their loans, and that's okay. You got the experience, you got the education that you wanted, and that's okay. For now at least. Alright, now on to savings. Here's an example to start off with. You save £1,000 for 3 years with 3% interest. One method of saving money is with saving accounts with banks. You invest and the bank will give you interest. Here's the formula for this. So new balance equals old balance plus interest. Here's a different formula here. Alright, we also need to talk about AER, which stands for the annual equivalent rate. Now the annual equivalent rate is the percentage increase in your investment each year. Here's the formula for it. Annual interest divided by the amount invested, and that answer times by 100. That's all for part 2. Next time we'll explain taxes for UK streamers and YouTubers. But thank you for watching this video with VopSays. I'll see you next time. Bye bye.